is to stay balanced in your perspective at any point of time, irrespective of whether it's a bull market or a bear market. So obviously navigating a bear market or navigating a correction becomes a very, very important part so that you can stay the course over the long term, so that you can actually see the benefits of being in equity.
Hello everyone, I am Ankit Kanodia, founder of SmartSync Services, a SEBI-registered investment advisory firm. Welcome to the 20th episode of Mission Smile guest webinar. For those who are joining or watching for the first time, Mission Smile stands for Making New Stock Market Investors Learn It Through Engaging Research. Guest webinar is an initiative where we call experts from the industry and learn from their rich experience in the stock market. Our guest for today on this 20th episode of Mission Smile guest webinar is Mr. Kedar K. Kedar Bhai is the founder of Congruence Advisers, a SEBI registered corporate research analyst firm. His investing style is market cap agnostic and he blends a combination of fundamental research and technical analysis. He has been a part of the investment management industry since 2011, after having spent 7 years in the IT industry in various roles. For more than a decade, Kedar Bhai has been a prolific equity investor and has worked with several ultra HNIs and family offices in managing portfolios across asset class. At Congruence Advisors, Kedar Bhai and his team are now going back to their roots of focusing on the small and micro cap segments. His research team publishes 3 micro cap business research notes on their website every month. In fact, I have gone through some of those micro cap business research on Kedar Bhai's website. And once we start the presentation, we'll also share the link of that website. And I would highly recommend all of you to go through it. So apart from this, I also wanted to mention that I happened to watch Kedar Bhai's presentation in IAS Goa Summit, I believe in 2023. And I was blown away by his extensive research. What I liked the most was how beautifully he married the numbers with the narration and gave some brilliant insights into economic, business, and consumption trends in India. So I know we are here to listen to him, so I'll not take much of your time. The title of today's webinar is Navigating the Correction, Lessons from the Previous Cycles. So the format is pretty simple. Kedar Bhai has a presentation ready. However, we will not keep it as a monologue. We can share our questions on the chat box. And from time to time, Kedar Bhai will take a break and respond on those questions. So over to you, Kedar Bhai. We can begin now. And thank you so much.
Thanks, Ankit. So pleasure coming on your platform for the first time. So in fact, for the first, I would say 5 years of my journey as a boutique asset manager, we were mostly focused on, just doing the basics, right? It's only the past couple of years that we started, coming and interacting on a lot of platforms. And to be very honest, we've been very, very choosy about the platforms where we have gone and represented ourselves. It usually comes through our trusted network. So formats like, let's say, IAS, so platforms like yours, where we know that number one, we are talking to genuine people. Number two, we are talking to a set of investors who are actually here for the learning part. So learning obviously is important, performance is more important. But then the dangers of today's situation is that performance starts to, take precedence over all the other qualitative aspects. And as all of us know, bull market mein performance to aa hi jata hai, one way or the other. It's only when the market goes into a consolidation, either a price consolidation or a time consolidation, that people start to realize ki all this Warren Buffett gyan and all those quotes. Now, suddenly you'll start seeing a lot of people referring to that only when the momentum in the market stops. And looks like we are in one of those phases where the easy part of the bull market is probably behind us for the time being. How longer this entire current bout of volatility will last, to what extent, is anybody's guess. But then that's the interesting part of the entire, I would say, the investing journey in India, right? You can't really translate global gyan cut to cut into India, because India has its own flavor of how things happen, right? So we believe that in India, as an investing community, now we are very quick to choose our heroes and villains, right? Couple of quarters of good numbers comes and suddenly the promoter becomes the next Aditya Puri or the next Narayan Murthy, right? And then even inevitably the sector goes into a little bit of a consolidation or a downturn. And then we are very quick to pounce on the entrepreneur, whereas the entrepreneur is doing the exact same thing जो वो bull run में भी कर रहे हैं, right? So India tends to give you certain predictable phases in the market. You usually have a very good year where you make 30%, 40% at the index level. It's followed by a year of consolidation. Sometimes it is followed up by a bad year. So we at Congruence, we have this, framework in mind where we see India as a start-stop market, right? And at the peak of every bull run, you have a lot of narratives coming through where you will say India will keep growing at 8%, 8.5% real GDP for the next 10 years. It's going to be really, really great going forward, right? So there's a lot of cycles. So one of my biggest learnings, because I started off as an amateur investor, right, who wasn't doing investing full time, so I had a full time job where I was actually a career salesman in the initial part of my career, right? So you don't really have the bandwidth to be really, really thorough in terms of the numbers. Weekend पे बैठ के आप काम कर रहे हो. So it's very easy to get taken in by these narratives, which the media will push upon you, which a lot of other people will push upon you. So the idea is to stay balanced in your perspective at any point of time, irrespective of whether it's a bull market or a bear market. So obviously navigating a bear market or navigating a correction becomes a very, very important part so that you can stay the course over the long term, so that you can actually see the benefits of being in equity. So in that context, we have chosen today's topic, which we believe is pretty relevant and contemporary as well, given where we stand. So without further ado, I guess I'll get started with the presentation. So let me quickly share the screen.
Kedar B, just check if the annotation is disabled.
Sure,
Okay.
sure.
Yeah.
Sure. I'm just gonna try and
Yeah, I don't see the annotation.
it's disabled actually. So
Right.
if I hope you are able to see the PPT on the screen.
Yes, 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 yes. So
Okay, sure. So
I'll be on, so I'll close my video so that we can concentrate on your PPT, but I'll be there throughout and I'll be writing my own questions also and taking stock of other questions as well. So please continue.
sure, Ankit, sure. So just getting started with the topic for today. So it is about how do you navigate the correction. Once again, there's nothing unique about what's happening in the market. If you go back to the previous cycles, there are a lot of lessons that we as investors can actually glean from the previous cycles. Because every pattern that happens in the market today has probably happened in the past. It's just that the macro context and where we are today in terms of the India journey is probably a little bit advanced compared to what happened in the previous cycles. But with that, we will try and see what exactly has been the flavor of, I would say, market consolidations in the past. Try and be as data intensive, try and draw parallels to what is happening in the market right now. So before we get started, we are in the advisory and the research analyst business. So certain disclaimers we have to, enforce in every single session. So we are a SEBI registered research analyst firm. So none of what we speak over here, none of it constitutes investment advice. Okay. This is not a buy, hold, sell recommendation, neither at the market level, not at individual stock level. So every single example that we discuss over here is more from a learning point of view. Yeah. Okay, just to wrap up a couple of other factors, which we believe it's not just from a, I would say, a compliance point of view, but some of them actually make a lot of sense when you listen to any, I would say, learning sessions of this nature. So the first thing is that we have been wrong on many things in the past. And it's a very high probability that we will be wrong on certain things going forward as well. Because end of the day, investing is a forward-looking endeavor where you end up making projections, you end up making certain statements, you try and derive the learnings of the previous cycle. So what happens is even if these are made with the best of intentions and backed by the best of analysis, they can always go wrong. The best investors probably operate at a strike rate between 60% and 70%. So you can build the most comprehensive data-backed investment thesis, but there is always a probability it can really go for a toss. So every decision that you end up taking on an investment or every single stock research report that we print, so ideally it should be seen in the context of the overall offering that any firm actually brings to the table and not on a standalone basis. So for this reason, so a single stock thesis may not really work for you as an investor. It may work as part of the overall offering that we bring to the table. So ideally, you should be doing your own due diligence on the stock before investing, or taking any of these learnings at face value. At the same time, more importantly, you should do a lot of due diligence on the person as well before you take that gain at face value. Because one of the big, I would say, cons of the current social media environment is this: you should always be in a position to judge for yourself that the speaker is he really speaking from personal experience. Is this somebody who has been an active market participant, who has made certain mistakes in the past, and is able to bring all those learnings together? So you want to make sure that this is not a person who's just recycling content that is there in the market, which is always easy to do in today's world of AI, today's world of extensive content that is being available on the internet. So without further ado, let me straight away go into the flow of the discussion. So Ankit, what we're gonna do is we just divided the current talk into four simple categories. So these are the things you can see on the screen. First, we will try and explore that past corrections. What has been the flavor of each correction, right? And in the interest of time, we're just going to be taking the past 3 periods of volatility as case studies in the Indian market, because we believe the context is much more relevant of 2021 and let's say even, I would say, 2018 and 2019 compared to, let's say, the GFC, where it was a completely different sort of a mechanism at work. So first phase, we're going to be looking at three market corrections that we have experienced in the Indian market. Understand the flavor of each one of them, right? Try and extract the generalizations or the learnings from all of these corrections, and try and see if we can fit this into a framework, right? A market correction typically has phases. It's not a very linear sort of an exercise, right? So once we have done that, we will try and present our view on where we think we are right now. And finally, what should investors probably be doing right now? Yeah, so this will be the broad flow of the presentation. So getting on to the first example. So the first example is the most recent consolidation that all of us have experienced in the Indian equity market. So this was that bull run that peaked out in July to August of 2021, the post-COVID rally, if you want to call that. And then you had this 1.5 year period of consolidation where you had the Ukraine war breaking out. You had the US Fed raising rates at a very, very aggressive rate, inflation, whole bunch of narratives changing, supply chain issues. So what ended up happening between, let's say, 2021 and 2023, the macro factors obviously are important, but that's not the primary, point of discussion over here. What we instead want to focus on is the behavior of the overall market across the three categories. So we're going to be looking at the Nifty 50 chart. We're going to be looking at the mid cap and the small cap charts, right? So the first example, right? So just look at this chart that you see on the screen. So October 2021 till about October 2023, right? Now, why is it October 2023 and why are we not stopping at, let's say the, let's say April of 2023? Because the Nifty chart basically gave you a retest up to this level. It is only after this that you could have conclusively said that you're in a very, very positive sort of a run, right? So even if you want to take things on a slightly conservative note, this was clearly a 1.5 year sort of a period of consolidation, right? Now, in this period, if you see, you will probably see that there have been multiple waves to the correction, right? Simple technical analysis, not to complicate things. What you will see is you have one phase, then you have a little bit of optimism or a little bit of bounce back coming back to the market, right? Then the next phase of sell-off basically begins. Then at some point of time, you make a bottom. But when you make a bottom, it is not very apparent saying this is actually the bottom, because then the entire environment feels so pessimistic that the investors keep feeling कि और एक round of sell off कभी भी आ सकता है. Finally, by the time you actually get clarity saying finally the volatility is behind you, there's a lot of self-doubt that investors will end up having. So the most important point to notice in this slide is this: you will see that this is a 1.5 year correction, and you can see the behavioral pattern of the Nifty for itself. Now, once you put this on a chart with the benefit of hindsight, certain points they look like they are very good attractive points. But real time, when you were experiencing this, I'm sure a lot of you would actually recollect what it felt like in the real time. So it will tend to get very, very confusing. So this is what the Nifty 50 did, right? So same period, same example. Let us look at what the BSE mid cap index did, right? The first thing that really stands out is this: the extent of fall was probably slightly deeper compared to the Nifty 50, as is to be expected. The correction once again over here happened in phases. But the more important part is that the mid cap index came back to its previous level and then continued on the trajectory without a single retest, right? So that was the nature of how the BSE mid cap index basically behaved. Quickly going on to the BSE small cap index, you will probably see a similar sort of a trend. You will see that the consolidation. Now this is where it gets a little bit interesting, right? I'll quickly go back to the Nifty chart. So the Nifty peaked out closer to mid of October, right? You can see this particular point here. If you come to the small cap, just notice that the small cap index peaked out in Jan of 2022. So clearly there was a lag. There was a period where the small cap index actually looked like the index that was decoupled from the rest of the market. Stocks were making new all-time highs, portfolios were making new all-time highs. But once the narrative broke, you can see the result for itself, right? Now, you should try and correlate this to what is happening in the current phase of the market as well. We will do that in a few slides from now. Yeah. So this was the behavior of all the three indices from 2021 to 2023. Now, there's no point in just looking at charts and not deriving any quantitative inferences from that. So we just tried and summarized the entire experience of what it felt like in the real time. So you can see that on the screen for yourself. You can notice that we have put in the date of the peak. We have also put in the date where a new high was basically made. Okay, I think this is 2023. This is not 2022. Yeah. So then what happened was you will see that you basically had a retest date as well, right? And also observe the maximum drawdown that you have in each of the cases. So the Nifty was 17% from the peak. Small cap drawdown was 24% from the peak. But more important, what were the real-time narratives that were sort of, doing the rounds between 2021 to Jan 2022? So this was the period where the Nifty clearly gave an indication saying things are going to get tougher from here on, but this small cap index continued to do well, right? So these were some of the comments that you can actually go and verify for yourself on Twitter. You can go to some of, let's say, the Twitter spaces at that point of time, some of the social media videos at that point of time. And these were the narratives that we were actually facing on the ground when we were going and talking to investors who were potential, subscribers to our service. So people felt that traditional fund managers who are managing large PMS, large AF, they are too conservative and they're actually outdated, right? So influencers who are able to, blend fundamentals with technical analysis, highlight the latest stocks, these are the latest game. And there is a whole bunch of people who actually fell for this, right? We actually met people on the ground who said that index funds are a waste of it, right? And the beauty of this is they were saying that index fund may सिर्फ sir 18%, 20% ही बनता है, whereas small cap में you end up making 30%, 35% on a sustainable basis. It sounds very stupid today, but this was actually happening at the point of time. More importantly, look at the third one. So people had this opinion saying the effort that I have taken as an investor, right? Our well-constructed momentum-driven small and micro-cap portfolio, which actually had a 6 month of outperformance between July of 2021 till about Jan of 2022. So this is the way one should be investing in the market, right? You should not be wasting your time doing a whole bunch of outdated gap. You should just be focusing on this. Just look onto the market favorites where everything is in your favor. Numbers are coming in well. Technically, things are falling into place. So some of the market favorites in that particular cycle. So IRCTC, IEX, Lotus Labs, RP Industries, Davies Labs. You can see where the stock prices are for a lot of them today, with the exception of Davies Labs. But the rest of them, they gave you a very, very healthy correction from there. And a whole bunch of that was actually driven by the narratives that were there, because beyond a point, the narrative sort of takes precedence over the right? But what happened once the narrative got broken and the Russia-Ukraine, issue actually started? The average small cap fell more than 30% from the peak. There were so many stocks that fell between 40% and 50% from the peak, right? And there was a very interesting phenomenon that happened in the formal, asset management market. So there were a lot of defensive fund managers who were very vocal starting from the mid of 2021 saying this party is not going to last indefinitely. So they took a call of going into the well-known defensive stocks at that point of time, right? But the beauty is this, they also fell along with the market in 2022, right? Not many of these large caps were spared. Not many of these high quality companies were spared. Okay. So they fell along with the market. And the double whammy with the benefit of hindsight is they also did not participate in the bull run that started in 2023, right? So this was an absolute double whammy, but this is something that you could not have seen coming, right? So I'll quickly go and let's say cover the COVID crash of 2020, right? Now, we haven't put up any particular chart for this because this was a very, very unique sort of a template, right? So just to refresh memories for the people who are actually there in the market at that point of time, right? So this is what the numbers actually look like. So this was a pretty unique correction because it was a one-way fall. It was an absolute one-way fall. You had the Nifty falling 30% in one single month in March 2020. I mean, the extent of the correction was so brutal that a stock like Kotak Bank, which is a mega cap, which was actually known as one of the best banks and one of the best stocks you could actually load up at any point of time, irrespective of valuation. Kotak Bank fell 10% around 10 a.m. on that Friday when the Nifty actually made a bottom. And that was on a 100 year sort of a sell order, right? That was the extent of, lack of buying force in the market at that point in time. So you can today say there are technical levels, none of them held in this particular direction. So the market took out one support after another. It was basically in a free fall. There was no time consolidation. There was no price consolidation. It was bloody madness, right? I remember this. I think the Nifty cracked the 200 DMA, which was around 11,200, I think, in one particular week. Next week, the Nifty went from 11,000 to 9,000 in 4 sessions. That's an average of 500 points fall at the index level on a daily basis. So do the math. It's 4%, 5% fall on the index level on a daily basis, which means some small caps are basically making lower circuits on a daily basis, right? It was that. Now, the best performers during the fall were the stars of the previous run. So these were the so-called horrific stocks. So HDFC Bank, HUL, Infosys, TCS, Kotak Bank, ITC, all those guys. So these were the best performers because they didn't fall to the extent that the market actually fell. In fact, they were one of the first guys to actually recover from the entire thing, right? Interesting thing happened. So chemicals, pharma, this entire package goes to the market. Okay, it was the first to actually recover, and it was the first to make a new all-time. And interestingly, we remember this phase very, very well because we had done the work, but then luck favored us a lot in that particular phase. So Ankit bhai, so it so happened that in our portfolio at that point of time, we had TV Labs, we had PI Industries, we had alkylamides, we had RP Drugs, and we had a whole bunch of stocks which recovered within 2 months, 3 months, right? But then, as you know, a lot of things in that can be short-lived. So chemicals and a whole bunch of these things. But coming to, let's say, the context of this slide in the overall presentation here, we believe this is one of the worst correction templates to actually learn because this is so unique. I mean, you take this and compare this to, let's say, 2008. 2008, May, the market fell. It didn't fall to such an extent in one single straight line. This was a very, very unique sort of a thing. So while you can get certain learnings from this particular correction, what we believe, this is a very bad template to sort of, base too much on, right? So Ankit, what I'll do is I'll just quickly cover the next example and maybe we'll take a few questions if there are any. Yeah. So
Sure.
now coming to the most interesting template, right? Which was 2018 to 2019. So I'm sure some of you would have been there in the market. Now you will probably appreciate the difference across all the three market categories, right? So this is the Nifty 50 weekly index chart. So 22nd Jan of 2018, right? The budget came out in February, where I think LTCG was introduced upon equities, right? So that led to a phase of sell-off. Then there were a whole bunch of macro things as well because the Dow Jones index was falling, the Nasdaq was falling, whole bunch of things happening, right? So the Nifty fell, it recovered, right? End of, I would say, mid of 2018 is where you had the entire NBFC crisis. So banks fell, lenders got absolutely hammered. But you will see that in spite of this entire volatility, Nifty was sort of, trading within a particular band. And the Nifty was generally healthy in the face of the overall correction. In fact, the Nifty made a new all-time high just before we went into the COVID correction. So this particular, range that you see on the chart. So September of 2019, This corresponds to the cut in the corporate tax rate that was announced by the government just overnight, right? I remember, I think the Nifty went up like 5%, 6% in one single day. Then it was followed by another huge movement on the following day, right? So that sort of, gave life back to the market after this round of consultation. Now, let's go to the next couple of charts, right? Now, look at the mid cap index at that point of time, right? Peak was almost a similar sort of thing, but then see the particular pattern. The market took 3 whole years to actually get back to the same point of the BSE mid cap index, which means the mid cap index fell in phases. It was much lower than the previous high when the COVID crash actually occurred. Then the mid cap index fell a little bit more than the Nifty. And then you took a whole lot of journey to actually come back to the previous level, right? Something similar for the small cap index as well. If anything, I would say the small cap index was much more brutal during that particular period, right? You will see a similar sort of a trend. So quickly summarizing this, right? What was unique about this particular thing, right? So this, I believe, was a very, very, I would say, a deep learning experience for a lot of people. So giving you a little bit of a personal context as well. So I would say personally, my serious days of investing started only in 2010, right? So 2010, say I was an investor. Initially, you start off with a small and micro cap heavy portfolio, right? You go through a whole bunch of, outperformance for 7 8 years, and then you get into 2018 to 19, which you hadn't faced in the past. So it was a near death experience for a lot of small cap investors, right? And incidentally, this was the cycle that was the best performer. Understand? So in this period of 2018 to 2019, look at this. The Nifty 50 max drawdown was 10%. BSE mid cap was 30%. Small cap was 40%, right? And this is where you had the rise of the high quality and the indexing themes that then dominated the market narrative between 2018 and 2021. So most important thing is this. This is what I want you guys to focus on. So the mid cap index fell for 17% in the first wave, a little bit of a recovery. Then it fell 10% in the second wave, right? Then it fell 7% in the third wave. And this was over a period of, say, 1.5 years, right? So the mid cap index was 13% lower than the giant 2018 peak as you went into the COVID fall, and then you fell 39%, right? So if you actually measure the, I would say, the difference in performance of the Nifty with respect to, let's say, the mid and the small caps, starting from the Jan 28 peak to, say, the bottom of April 2020, these numbers are absolutely mind-boggling, right? What happened to the small cap index? 16% in the first wave, 20% in the second wave, 10% in the third wave, right? The small cap index was 25% lower than the Jan 2018 level as we went into the COVID fall. Okay. And then we fell 40% from there. Now, this entire beatdown that materialized between Jan 2018 up till April 2020, this beatdown is what has set the stage for outperformance of these categories over the Nifty 50 starting from April 2020, right? So if you look at a 3-year historical performance, understanding this entire context is very, very sort of important to understand why the current outperformance is coming. Now, this has implications for what we believe will happen in the future as well. We will come into that during the subsequent part of the presentation. The most important takeaway from this is, I would say, just look at the difference of the nature. Look at how different the 2020 correction was. Look at how different the 2018 to 2019 correction was. Look at how different the 2021 to 2023 period was. So then what happens is now, see, these are just three of the templates that you have seen in the previous, I mean, the most recent corrections. So the big takeaway from this is this: as investors, we need to be open. Which of these things will materialize, the market will tell you only over a period of time. So please don't be in a hurry to conclude anything. Please study history. Please understand that things can happen in phases. There will be phases where you will go and chase breakouts and everything works out. And then there will be phases where every single breakout actually fails, right? So having this context, having this learning in your mind is extremely important, right? So we'll probably take a pause before we summarize, all of these learnings into, the phases of the market correction. So Ankit, happy to, take any questions if you have, because I think there are certain things on chat.
Yeah. So thank you, Kedar Bhai. So I think the point which you have discussed is very, very, very important. And through these three examples, uh, it basically confuses a new investor more than maybe in the subsequent slides you'll give more answers. So my first
Absolutely.
question to you is that in each of the example, what I could understand is that each correction and the rally post the correction follow a different pattern. Okay, it is not
Okay.
so as they say, history doesn't repeat it; it rhymes, right? So I'm talking from a point of view of an amateur investor. How can he or she prepare himself or herself for the forthcoming crashes? So, what would be your advice to them?
Yeah, absolutely, Ankit. So, with your permission, na, I will park this particular question for the timing. I mean, certain aspect because the rest of the PPT is about this. Investor को क्या करना चाहिए, right?
Okay,
What are the learnings that you can aggregate from all these things? But to once again reinforce, जो point आपने पकड़ा है ना, that is the most important point, right?
right,
Once you once you see clear indications कि market ने एक peak दे दिया है, right? And you are going into a period of, I mean, you're already into a period of, let's say, either price consolidation, time consolidation, or maybe a combination of both, right? Most important thing is you don't have any particular set pattern in your mind, because what is happening today and what is going to happen in the future, it depends so much on what has happened in the past. So getting that overall picture right is very, very important, right? If a correction occurs, so I'll tell you the primary difference between the 2020 fall and this current correction kya hai. 2020 fall, when it happened, right? Already small and mid were beaten down, right? 2018 to 2019 was a tough time. You just had a 6 month recovery. Then COVID crash came, right? So in April 2020, I think people were confused कि भाई क्या खरीदना है. I mean, the people who had the guts to buy, who had the conviction to buy, na, let's say that period starting from April to November 2020, the confusion was on क्या खरीदना है, right? Especially for somebody who had a long, horizon, saying 5 साल अभी मैं पकड़ के बैठ सकता हूँ. I'm a long term investor. I will do my research. I know the numbers will fall into place. People will figure out how to address the COVID situation. That was different because you went into the COVID crash on the back of severe underperformance of small and current correction. We are not going on the back of underperformance and small and mid. We are going there on the back of outperformance, right? So then how will the next cycle play out is a very, very interesting question that all of us need to answer. So we will cover that in the subsequent part of the slides.
yeah. So another question, Kedar Bhai, related to this, and it is as in it is up to you whether you want to take it now or maybe
Mhm.
sometime later. But the question is that we all know that 2018 to 2021 was a period when Nifty and large cap uh, particularly did much better than the small cap and maybe the mid cap and micro cap index, right?
Mhm.
So, but I think from September 2021 onwards, there has been a camp which has been always saying that we might see a repeat of 2018 to 2020 kind of a period for small cap and micro cap. So
Yes.
when some people make these kind of predictions, so
Mhm.
sometimes it goes right, sometimes it doesn't go right. If you look at last 3 years, it has not gone right for anyone who is waiting for that kind of a crash. So, what is your view or what is your suggestion to specifically new investors as
Mhm.
to how are predictions important or not important, and how do you look at try to make predictions, or should you completely disregard making predictions? If you can just touch upon that topic, that would be very helpful.
Yeah, absolutely, Ankit. So I guess this is why investing is very, very complicated. Okay? It looks simple with the benefit of hindsight. So I'll tell you, see, patterns are there, right? Pattern जो मुझे दिख रहा है सबको दिख रहा है. Fine. But the investor actions will be different, right? As you said, there is a camp which says no. End of the day, it has to be the larger companies which will probably drive the Indian economy forward and maybe create that outperformance for the market participants as well. Now we need to get into the nuts and bolts of why they believe that, right? Now, when did this narrative come into force in the market? small and mid cap rally sort of unraveled. Now, that unraveling, it happened on the back of certain, I would say, incidents in the Indian market. So you had demonetization in 2016, which was a massacre for the SME industry, right? Then you had GST that was pushed through in July 2017. So a lot of people, lot of small companies now, which didn't really have that sort of financial controllership or compliance things in place. So 2017 GST ke baad na, the cost of compliance just went up drastically. As a large company, you have the access to the right people. You can go and consult with a whole bunch of consultants out there. So people were able to put things in place very very easily. But if you were a SME guy who's based in, let's say, tier 2 market in the country, suddenly you have to figure out कि भाई GST क्या होता है. There's so much of new compliance burden that is basically coming in. So people got busy over there. Demand pattern, consumption slowdown was pretty drastic, right? In 2017, 2018 on the discretionary side. So the only pockets of the Indian market जहाँ पे 10%, 11% growth दिख रहा था were the large caps because they had the resources at their disposal. And overall India का GDP growth rate was like, I guess, only falling over a period of time, right? So that sort of, started coming into the numbers. So then investors said, "ठीक है, I mean, growth rate is not very high, but where is it that I see certainty of 11%, 12% growth in the market? You could only see it in FMCG. So Asian Paints, HUL, all of that started spiking. You went from 40p to 60p. So then that narrative got cemented because it was backed by numbers initially, right? So as investors now, one of the big distinctions we need to make is this: every bull run starts with a very very solid logical premise which is backed by numbers, but at some point of time na disconnect aa jata hai with respect to the reality. That is where investors need to change their mind. They need to have some sort of a macro framework. Now marrying that to what exactly is happening in India today. So today India, you are not in a low growth environment yet, correct? So slowdown hua hai in Q2. I guess FY25 GDP numbers are not going to be as aggressive as what it was projected initially, but you're still talking of a 6% plus sort of a number, right? At a 6% number, you are saying we are into a medium growth sort of a trajectory. What is more important is profit pools are basically shifting from one segment of the market into another segment of the market, right? Purely because of the cyclicality, government spending kar raha hai. So it's going to come into all the economy facing sectors. So the narrative that was there between 2018 till 2021. So I guess some investors maybe they are guilty saying they were not quick to calibrate. And more importantly, Ankit, since you're in the market yourself as well, if you are very public with respect to your investment philosophy, it is very difficult to do a U-turn, right? If you're a boutique, it is okay, boss. I don't have a big reputation to defend yet. But if you are managing 50,000 crores of a year, every other day you're coming on CNBC and saying this is our strategy, this is what has worked in the past 3 years. You make a change in your stance. I mean, there are other factors at play. So there will always be some pocket of the market that is completely wrong at any point of time, right? The winners, if you see, they keep changing. जो 2018 का राजा था, he became an adjective in 2020 and 2021, right? Which is not the right thing, but that's the way the market is there. जो 2020 का राजा था, today he is underperforming for the past 5 years. So that's a natural cycle of the market. So our job as investors is to सारे perspectives सुन लो, right? Then you have to apply your judgment, and the judgment is not easy to come by, which is why first time investors, amateur investors are probably most vulnerable because they don't have that personal experience. At most, you have maybe read books, you have gone through a couple of sessions like this one. So it's very important that you do the ground up work by yourself to some extent and ensure कि बड़ा गलती नहीं करना है. गलती तो हर कोई करता है. So I believe the context is very, very different, and that is a very important input which the charts they will capture at some point of time. But initial phases में ना disconnect रहता है. That is where the confusion aspect actually comes.
Yeah, and Kedar Bhai, so I think you explained it very beautifully. But a couple of points, I think someone in the chat box also mentioned that change in categorization of mid and small cap, that also led to a lot of fund flows moving in and out. That was also
Absolutely.
one thing. And I think also technically also if you see in terms of flows, so the kind of volumes we are getting in small caps and micro caps and mid caps today, and you
Yeah.
compare it to what was there in 2018 to 20, that also has completely changed, right? So
Absolutely.
one thing is primarily on ground how things have moved for the country, and the other thing is also technically from a market perspective, how many new investors have come, the kind of interest we have in small cap and micro cap space, that has also changed a lot. Having said that,
Absolutely.
things can again change later on also in terms of things being difficult for the industry or particularly small cap and micro cap. But
Mhm.
because something which has happened in 2020 to 20, 2018 to 20 doesn't mean that it will immediately repeat just because a particular section has had a good run for 1 year or 2 years, right?
Yeah, absolutely. And I'm very happy that whoever has brought this point out, he's covered another very, very important aspect.
Hmm.
See, when you have any economic theory, if you go to classical economics, they say ceteris paribus, which means everything else remaining the same, एक variable हमने अगर change कर दिया, okay, then this is what I expect the outcome to happen. Now, in the real world, you can't really force fit a model, right? I can have three variables changing, right? So
Right.
this is the classic question I keep asking to people. So just go back to the day demonetization was announced, okay, right? So this was, I think, November 4th, November 8th, है ना? Right? November 7th or 8th of 2016, right?
Yes.
Same day, two events happened. Number one, Donald Trump came into power when entire everybody was confused, saying Hillary Clinton is going to win. Correct. Previous day evening, ko Modi ji announced demonetization at 8 o'clock. I was sitting in Trivandrum at that point of time. Then I was running around to get 100 rupee notes because मेरे पास सिर्फ 500 रुपए का नोट था. But next day morning, I remember I was working for a bank at that point of time and I had put options on that. ठीक है, because I took put option saying boss US election आ रहा है, किसको पता, let me be on the safer side. Nifty opens 4%, 5% lower. ठीक है, क्यों? What is the weightage you will give to demonetization? What is the weightage you will give to Trump? We
Right.
don't have any answers because two variables are hitting you at the same point of time, right? Similarly, let's say inflation आ गया. So what happens is we are not saying 2018, 2021 जो हुआ it may happen. We just saying उस point of time पे क्या हुआ. And one of the very important learning concepts is this. Whatever learning we get, you have to abstract it to the next level, next higher level, varna you will get misguided. To give you a very simple example, let's say you were a PSU bank heavy investor, right? Once the NPA cycle started, क्या हुआ था? Duvori Subbarao, the RBI governor, basically did one single change. He said NPA classification and provisioning has to be done through the software based on certain rules which the RBI gave to core banking vendors, right? So I was a core banking salesman at that point of time. वो मॉड्यूल मैंने खुद जाके 4 बैंक्स को बेचा. I wasn't smart enough to understand कि उसका implication क्या, right? But you do basically something like that, suddenly everything is different, right? So कॉन्टेक्स्ट जो है ना, ये बहुत ही ज्यादा आपका बेसिकली इस केस में प्ले करता है. सो वन थिंग चेंजेस, उसके बेसिस पे दूसरा चीज चेंज होता है. सो द आइडिया इज नॉट टू से कि उस पॉइंट ऑफ टाइम पे क्या हुआ, यहाँ पे क्या होगा. सो दी लेट्स से एट दैट पॉइंट ऑफ टाइम, इफ यू आर लर्निंग फ्रॉम दैट वाज बस मैं बैंक में कभी पैसा नहीं डालूंगा. Okay, नहीं, the first level is I will not invest into PSU banks, right? Second level of inference you can draw is I will not invest into banks. The actual right inference is anything that is a regulated industry, I will be careful. If you come to that level of abstraction, you will recognize that there is a risk in pharma. You will recognize that there's a risk in telecom. So, objective of this, whatever we are talking about here, is not to say 2018, 2019 mein kya hua. We are saying let us derive learnings from there, abstract the learnings to the next highest level so that your wisdom and your knowledge can be applied across domains, so that we don't get lost in the context of the nitty-gritty micro details, which is a very important aspect of investing. And trust me, lot of people get this wrong. I have gotten this wrong in the past. Hopefully, I will not make that mistake in the future, but things are easier to say than to do right in the market. So that's the big takeaway.
That was wonderful, Kedar bhai, how you explained what things happened during the demonetization time. It reminds me of what happened during the COVID also. So when the market started going in a free fall in March, I remember probably it is 23rd March or 23rd March of 2020 when the market bottomed.
Yes.
Okay. And then on that particular date, actually, Trump announced a big number of people who got affected by COVID. Okay. And in India also, from there on, over the next few months, there was lockdown and everything was almost shut. But look at where the market bottomed. Who on earth would think that at that particular time the market is bottoming out and this is the time to invest? So sometimes when we look at all these macro events or anything which can affect the market, of course, there are many factors, as you rightly said, will affect the market. But at what time and with what intensity, that is something which is very, very, very difficult to predict and accurately act upon. Right?
Absolutely. Absolutely. I mean, look at the number of factors. Domestic inflows kitna aa raha hai. I remember, see, 2016, 2017, when we were going around meeting people as wealth managers. Huh? उस point of time पे we started saying, sir, SIP as a concept now finally it is taking off. 2018 March, I think the industry sort of celebrated saying 8,500 crores of SIP flows per month आ गया, नया record हो गया. Today you are crossing 25,000 crores, right? Look at the distance we basically covered. I mean, if you actually start counting the instances now where the FPI sell number is negative for consecutive months, I think the longest stretch I have seen was in 2022, 8 months, 9 months of consecutive FPI selling. Prior to that, a pattern देख लीजिए. You had 4 months. So if you were a short-term technical trader or let's say an option trader, ना, you looked at the data of the past and you said, भाई 4 महीने से ज्यादा कभी एफपीआई ने सेल किया नहीं है, सो एफपीआई आएगा. जैसे करुण अर्जुन पे होता था ना, मेरे बेटे आएंगे. सो इफ यू से कि बस अब एफपीआई आएगा, you are waiting for the next 5 months, by then you're bankrupt. Correct? What was the variable that changed? Was the Fed was hiking यार, war चल रहा है दुनिया में. Those two factors too, which is what makes investing so complicated. Straight jacketed approach कभी काम नहीं करता है. In fact, the moment I will tell you, I'll stick my neck out on this. The moment somebody says I have a winning strategy, ना, हो गया. I mean, if you have a winning strategy, boss, you will garner every single paisa of AUM that is there in the country, right? So market diversity is very, very important. Normal market में diversity of views आपको रहेगा. You will feel confused. The only time you have clarity is maybe 30% of the time. Okay, 15% of the time when the market is closer to the peak, where सबको लगता है कि market चल जाएगा. और 15% closer to the bottom, where everybody is confident अगले 6 महीने में पैसा नहीं बनेगा. The rest of the time you are confused. That is what makes a market. That is where you can actually create alpha as an investor. वरना क्या है सर, इंडेक्स फंड पकड़ो, ये सब ज्ञानबाजी क्यों करते हैं?
No, no. So, just one last question.
Sure.
Somebody posted this on the chat box where he asked about your views on valuation in the large caps. So he says that except cement, he can't see anything interesting, or probably he's unable to see earnings growth. What's your view on this?
Okay, ठीक है. So now we are coming into giving our assessment, right? So disclaimer है, क्या होगा market बताएगा, time बताएगा. But for the time being, see, this is what we also are struggling to reconcile, and I have been writing about this in my monthly status, right? A lot of people are coming and telling me कि बस small cap is overvalued, आपको large cap खरीदना चाहिए. I'm saying बस value कहाँ पे है large cap, right? The one big pocket जहाँ पे आपको valuation is lower than historical averages, you can see justification for why it is lower now, which is lenders, 35%, 36% of the market. If you come to insurance, right? वहाँ पे वेरी फ्यू पीपल अंडरस्टैंड वैल्यूएशन ना. आप एम्बेडेड वैल्यू लोगे, यू विल कंपेयर दैट टू मार्केट कैप, कहाँ पे खरीदना है, एवरीथिंग इज फजी, राइट? So insurance, you will your PE will always be high. Then you have consumer. Consumer, I can look at it today and say Asian Paints is at 50 PE, 51 PE. It was trading at 80 PE, but earnings growth कहाँ है, right? So I may see low absolute and optical valuation there. Do I see value? Probably not, right? Then you come to IT, 30 PE पे चल रहा है, right? 5 years ago the market was saying 20 PE से ज्यादा IT कंपनी को देना नहीं चाहिए. Today you are at 30 PE and constant currency growth is hardly 4%, 5%, right? So कहाँ पे है value? I completely agree. If I wear my hat as a bottom-up investor, ना, opportunities in our assessment are still outside of the Nifty 100, to be very, very honest, right? Bottom-up investing अगर करूंगा Nifty में, maybe I'll find 4-5 stories that are basically fitting our framework. But then, so we are not able to reconcile, to be very, very honest, saying लोग बोल रहे हैं कि Nifty 50 खरीदो, large cap खरीदो, but वहां पे भी कहाँ है? We don't have the visibility. So do you just buy the Nifty 50 because you believe everything else is overvalued? Then तो liquid fund खरीद दो. Why do you want to come into equity, right? That we have that as a choice, right? If you're a retail investor, if you're not answerable to somebody, if you're a boutique guy, I can take a 50% cash call if I want to. the large cap fund manager nahi le sakta hai because the entire framework prevents him from doing that, right? So no straightforward answer, but I completely agree to whoever has posted this question on the chat. We see opportunities outside of the Nifty 100, even though we believe ki volatility hai, but we are focused on the alpha of the next 3 to 5 years, na, rather than saying अगले 5 महीने में 5% बचाऊंगा 10% बचाऊंगा. So you have to be clear about your objective. So if alpha generation is your objective, you still have to look outside of the Nifty 100 is our honest opinion at this point.
Oh, that's a very, very, very good, useful insight which you have shared, Kedar bhai. So people focus too much on saving the downside or cutting on the downside, but there is always a limit to how much you can cut the downside. But there is no limit in case of upside if you are finding the right ideas where growth opportunities are there and where valuation is also comfortable. So sometimes we fall into that cell. So agar isme mein I'll just make a digression. In personal finance also we make this mistake, specifically in India. कि हम लोगों की ज्यादा फोकस होती है, अरे सेविंग करो, पैसे बचाओ, पैसे बचाओ, पैसे बचाओ. There is nothing wrong. I am also someone who say that you should not be spending without any discipline. But focusing too much on the saving thing is basically keeping a closed mind about on the earning potential, because there is no barrier in terms of increasing your earning, but there is always a strict limit to which you can control your savings. Similar, I think similar thing happens in case of the market as well, in investing as well, right? So I think we covered a lot of points now, and thank you so much for answering all the questions in detail. Now we can go back to the presentation, and maybe sometime later we'll again come back on the
Sure.
session. Yeah.
Sure. Okay. So I'll just now go to the next slide, which is, I would say, one of the more important slides in the presentation, right? So यहाँ पे what are we doing? We are trying to, put the entire thing into a framework, right? So we've taken examples of what happened in 2018, 2019, 2020 में क्या हुआ, but all that is history, right? Finally, investor को करना क्या, right? So we believe there are certain phases in a market correction, right? Now, we're not saying these are the only 3 phases that are possible, but at a high level, mota, I think 80% of the time, this framework should basically work, right? Phase one is where an bull market is either losing steam or it's coming to an end, right? Now, it is never obvious as you approach the peak. You can only figure out after the fact, after you have seen certain things changing in the market. But then this peaking out phase, there are certain characteristics out there, right? You will probably see price rejection at the peak, maybe once, maybe twice, maybe multiple times, right? So price rejection is a very, very common factor, because every time the market crosses a particular level, every time the stock crosses a particular level, you will see that there's a steady set of sellers who are happy to give it away, right? This phase is usually price rejection ke baad, you usually have a very quick fall that comes through. I mean, the fall is not a very steep one. You may not fall 10%, 20% in all the cases. Usually the fall is maybe 4%, 5%, a quick fall, and then you see a fair amount of stability, right? Now, at the index level, if we look at the index level, you will have some stocks that will continue to rise, right? Now, just because the index is peaking out, it doesn't mean all stocks will probably stagnate or start falling, right? Some stocks continue their rise. Fine. This is what shows up in your technical charts as relative strength. This is what shows up as, momentum in your particular framework, whatever you want to call it. While some other stocks are basically starting to fall, right? Some fall 5%, some fall 10%, 15%. So downside beta basically keeps changing. More importantly, at this point of time, average investor, what is the thought pattern that is at play, right? So people look at the technical pattern, they will look at this and say the trend line is not violated yet, right? Trend line abhi tak violate hua nahi hai, so technically you say you're still in an uptrend. Now, bull market ends up teaching up certain bad patterns as well, right? So bull market mein hota kya hai, every time you fall 5%, 10%, you go and put in some money. The market recovers, makes a new all-time high. So usually seen investor behavior is, let's say Nifty peaked out at 26,200 in September, October 2024, whatever it was, right? So there you would have seen certain people just believe ki chalo, this is another buying opportunity, because you believe that the market will recover soon. Overall, if you look at the mood of the average investor, or let's say majority of the investors, focus on risk management is basically laughed at because risk management has actually taken away return from you in the past, right? The people who had the least amount of worry about risk, the people who were quick to pull the trigger and to just trust the market trend blindly, they are the ones who made the highest amount of return, right? So peaking out phase में यही होता है. So you have clear cut signs of price rejection. You will probably have a quick small fall. Market trend is still in favor of certain stocks are continuing to do well. So लोग बोलेंगे कि market breadth is still okay. You don't really have a problem. And this is the investor thought pattern. Now, at some point of time, the phase two of a correction starts getting more and more mileage. It starts to become more and more, I would say, dominant and prominent, right? So we like to call this phase the grinding lower phase, right? So what happens? You will have sharp rallies middle. So if the market has to form a head and shoulders pattern, I mean, first you form the head. I mean, first you form, let's say, the left shoulder, right? Then you have a steep rally that forms the head. Then you fall to the neckline. Okay, then another rally begins, right? So you will always have these rallies, but most of these rallies, once a market peak is already in place, the clear distinctive pattern is you will probably see that each of these rally fizzles out below the previous high, or let's say close to the previous high. That is when you start drawing these resistance trend lines. That is when you start saying it's a higher, I mean, it's a lower high and a lower low that the market is trying. Most important thing to focus on in this particular phase is this: the leaders of the run, the pockets that have been leading the run over the past, let's say, however long the bull market has been at play, they stop rising. New information comes in. Okay? You have firms winning new orders, right? You will see management giving very, very optimistic projections. They will say we are putting up new capex. We're expecting volume growth to actually increase in FY26. Whatever positive news comes in, the leaders of the run basically stop rising, right? Some pockets may make a new all-time high. Fine. Whereas the weak stocks will continue falling. So chemicals jo weak the going into the market all-time high, they have fallen even more from there. Consumption has gotten weaker. So you will have a lot of, diversity of views even at this particular thing. So putting this back into the framework, just go back to what I said 10 minutes ago. Peaking out phase may there is consensus, right? 15% of the time, everybody is confident saying things are working well. Phase two is where you have a lot of diversity of thought patterns, right? Some people believe that this is a temporary phase. Some people believe this is the start of a long correction. Whereas some people believe it's a matter of 6 months, 12 months. You will only have a time correction. You will not have a price correction. Now, this point of time, what are the more important, I would say, investor thought patterns that you need to be consciously aware of? There are some people who will justify this entire phase saying, okay, market has gone nowhere, but my stocks are in, right? My portfolio is still making new all-time high. And this is actually happening. This was actually happening over the past 3 to 4 months because you pick up any of the mid and small cap funds, right? The, so BSE 500 was up maybe 10%, 12% YTD basis pair. Some funds are at 30%, 35%. Average mid cap fund was close to 25%. Average small cap was maybe slightly higher. Flexi cap funds were between 20% and 25%. So portfolios are still making all-time highs because the market is still supporting active investing, and जहाँ पे भी number आएगा, stock prices are still, I would say, reacting positively. Now, this is where the mistakes basically start to happen, right? Let's say if somebody is sitting on 10%, 15% cash at the point of time, people go, they deploy the remaining cash because they will say the index level does not matter to me, because the fundamental, I would say, disconnect over there, right, is that you are still operating with a bull market, right? Market is slowly changing its structure. It's not very, very obvious, but you are still operating with a bull market mindset, right? There is focus on risk management, but your primary bias is still, I would say, towards the positive because you believe it's a 3 month, 4 month time consolidation. Strong stocks will continue to do well. You will keep looking at relative strength indicators without focusing on the, I mean, you are probably losing sight saying the broader market health is now deteriorating, right? Simple triggers: how many stocks are there above, let's say, the 50 DMA? How many are above the 20 DMA? How many are above the 200 DMA? वो जो proportion है ना, it slowly starts getting skewed towards the negative over a period of time. But because it happens gradually over 4 months, 5 months, lot of us struggle to sort of make that calibration. So you still operate with a bull market mindset, right? And then you have the phase three, which is where you can say all the hell breaks start, all the hell starts breaking, right? So we don't have to go very far. Just go back to the correction of Monday, right? So Monday was the first time where you actually saw small caps falling three times, four times of the Nifty. Throughout this week, you have seen that pattern on bad days. Okay? Then you'll have a little bit of a rally that is absolutely fine. So is phase by what happens? The downtrend of the market and stocks night becomes very obvious. So prices start to fall, let's say consolidate closer to the 200 DMA. Pattern आपको बता देगा कि the bias is probably more to the downside, right? The downtrend becomes very obvious. Once support levels go, sharp falls that you can see 5%, 6%, 7%, 8% in a day. The list of 52-week lows, it only grows longer and longer. You will actually struggle to find stocks which are sustaining breakouts, right? You will actually struggle to see stocks that are trading above the 50 DMA. It just dwindles down. If you had 200 stocks, let's say 2 months ago, today you will probably have maybe one fourth of that number, whatever that number is, right? More importantly, strong stocks and portfolios to start falling hard, right? That is because there's a complete lack of buying interest. Everybody is saying, let me wait and watch. At least the institutional guys are saying, let me wait and watch. Only the retail janta is probably saying, chalo, hum log khareedte hain. Once small caps start falling, let's say 3 to 4x of the Nifty, the first pattern that you see, that is where you need to start becoming careful, because that is when you are basically forced to calibrate. So then investor thought pattern kaise badal, right? Some set of people, they start saying the market might be knowing something that I don't. So institutional investors, if they are not committing money, fourth month, fifth month of, let's say, FPI selling chal raha hai. So the mindset basically says, okay, I am not the only smart guy around. There are other smarter people around, right? So the market knows something that I don't. One set of people straight away cut their positions and go home. They will say, boss, jaan bacha lo while you still can. Then there's another set of people who say, I'm a long-term investor. Or kitna girega, it's already down 10% from the peak. Maximum 20% girega. Technical patterns start screaming at you saying, downturn is coming. Just sell and go away. Don't carry any positions right now. So if you are following a lot of these technical guys on Twitter, some of them are very clear saying broader market health ठीक नहीं है. अभी हमको कुछ करना नहीं है. So people are straight away out. Then you start seeing narratives about how taxation is very inefficient, government is useless, regulators have no clue, they don't care about this, they don't care about that. All these narratives and all these stories, na, they start doing the rounds once you start phase three beginning. And phase three jo hai, this once again can happen in phases. Just go back to the chart of small and mid between 2018 and 2019. One fall, stability, next fall, stability, next fall. ये multiple times ये चल सकता है. So to summarize, what is it that really destroys portfolio once a market peak is in place, right? So today, I guess anybody can look at the chart. You can say there's a head and shoulders pattern, right? You can say Nifty probably has made an interim peak for the time being, right? What destroys portfolios once a market peak is in place? So this will tell us what to do and what not going forward. Okay? So some people would have already exhausted the entire cash buying the initial dips. So this is typical replication of full market behavior. So that by the time the index is down 10%, the average stock is down 20%. Now you are basically out of cash. Then every day you are you are staring at the market and basically praying. That's it, right? The focus and this behavior is triggered by a refusal to calibrate, right? The focus is still on return maximization rather than thinking risk management is pretty important, right? Market ka texture gradually it has basically changed. Either we don't have that necessary tracking mechanism in place to be able to recognize that, or we have a behavioral issue where you're saying, okay, I can see this is happening, but I know better. So plain old refusal to accept what is happening on the ground. Okay? Third thing is there's a lot of false bravado that you see closer to the market here because small cap index is still outperforming, right? But today, just look at the relative outperformance of the small cap index last week and look at it today. Now, today, on a 6-month basis, small cap is still outperforming, right? But then one more phase three sort of a sell off where small caps fall 4 times, 5 times of the Nifty for a week. Your entire outperformance of the last 1 year is basically gone, right? Another behavior which is very suboptimal is this. We have this tendency to decrease the average quality of the portfolio because we are so hell-bent on chasing the short-term elusive alpha, right? And we are still chasing breakouts. See, for a breakout to work, talk to any good technical guy, right? I mean, we do technicals, but we wouldn't really call ourselves experts in that particular field. We are still learners. The guy who wants to do short-term trading, chasing breakouts, he looks at the overall market breadth indicators, right? In a healthy market, breakout chase karoge, things will work out. In a market where things are not in your favor, you will still see breakouts, but you will see breakouts don't sustain. So what happens is you chase something, you expect a 20% return in a short period of time. What you end up with is आपका stop loss अभी hit कर जाएगा. So most breakouts will fail in a bad market. So phase 3 में once you're already there, once the market has given you the first indication of a phase 3, you don't know what the future is going to be, but you have to start biasing yourself, saying negative situation possible. Final thing which I really want to cover on is this. Maybe it's the inability or the unwillingness to identify the mistakes we have made in the past 1 year. Because talk to the most experienced fund managers out there, okay, people in their 50s, 60s who have seen multiple falls in the market. Everybody makes mistakes in the final phase of a bull run. At that point of time, it doesn't look like a mistake, but once the consolidation period comes in, now you realize कि boss मैंने गलती कर दिया, ठीक है? Then it is not just a matter of correcting those mistakes. You need to understand and evaluate the thought patterns behind that and ensure that you're not guilty of this going forward as well, right? So now take this entire framework and ask yourself, right now, where do we think we are? Our assessment is first indication of phase 2 already did there. Will it be the only instance? Will there be more instances? We will have to see. But right now, I would say you need to have a clear-cut focus on risk management because the market level jo hai, it is definitely lower than what it was 6 months ago. But is it still in the value zone? Probably not. Probably not. So you need to have some sort of a risk mitigation strategy and you need to follow it to the basic T. So, Ankit, I'll probably take a checkpoint here because I think this is a very, very important slide. And there is nothing that is, I would say, precise or very, very, I would say. But you can take this framework and specifically apply it to a stock or to an index. You need to use judgment. It's a probabilistic endeavor. But I think यहाँ पे I will probably take a checkpoint.
Sure. So, Kedar bhai, my question is to something which you just said towards the end of this slide. So, you talked about small cap outperforming on a 6-month basis, but maybe underperforming in the last 1 week or last 1 month. So, my question is, so if you sell now, say, assuming that you are a small cap heavy investor, okay, you means not you, I'm just taking an example, okay. If you sell now, the risk is that maybe small caps may turn in the next few weeks or month. And if you wait for the confirmation of a 6-month underperformance, maybe that can turn out to be a far deeper loss in the portfolio. So how do you prepare yourself or how do you structure your portfolio given the current data which we have today of a 6-month outperformance of small cap and last 1 week or maybe 1 month underperformance of small caps?
Yeah. So यहाँ पे first point is to look at the data, right? Now, if you assume that, if your basic thought process is this is a correction or a time consultation, right? Every single data point from every single correction in the past, small caps have always fallen more than the Nifty, right? So there is something known as a base rate, right? So the base rate of corrections for a small cap is not in favor of small caps, right? So that's the first data point which should, tell you what to do. Second thing, now it is not just a question of, small cap में क्या हो रहा है. Sometimes what happens is question is आपका जो carefully constructed portfolio है, where is it oriented? If you are oriented by sitting in the wrong pockets, right, or pockets which are either they don't have earnings triggers or technically they are very, very weak, what will happen is small cap index may recover, लेकिन आपका portfolio will not recover, which is actually the bigger risk. See, the bigger risk for an active investor is what? It is not that the market will fall. Market to गिरना ही, right? It will rise, it will fall, it will do something. The bigger risk for an active investor is what if the market does well and I don't do well? What if the market falls 10%? Nifty falls 10%, small cap falls 20%, and I fall 50%. That is what you're really worried about, right? So then you have to introduce the elements of portfolio construct as well. right? Which means go back to the basics. Are you still chasing the darlings of the past one, right? If you bought a stock at 90 PE saying earnings growth aa raha hai, earnings growth instead of 20%, 15% aa gaya, then to bhai, it's a totally different thing. So then you have to bring in elements of what exactly is your style and downside contain karne ka, if that's the objective of it. I guess there are only some two, three strategies that are broadly available in the market. First thing is you have to say, okay, I don't know, I'm not sure. So you create some cash in the holding, right? Whether you do 20%, 30%, 40%, वो आपको decide करना है based on your unique situation. Now, this answer assumes that you are not managing money for other people, right? Because your primary audience is people who are probably managing their portfolios, who want to become, better investors over a period of time. So that's a personal finance related question. It is not a market strategy question. So cash आपको कितना बैठना है? That depends on what is your current equity allocation. So if you are somebody who has a tough time stomaching a large market correction and you are in equities to the extent of 70%, boss, you have work to do here, right? Second thing is at this point of time, incremental money ka, I mean, incremental return, at least in the short term, if your assessment or if the market tells you ki it doesn't look all that great, right? Now, as a retail investor, you can be agile. Right? The bigger danger is this: if you don't calibrate your portfolio to the market will fall, you will fall, the market will rise, you will not rise because you are still stuck in the old pockets. And trust me, this has happened to me in the past. This has happened to me in 2021, right? You are still holding on to those things. So multiple elements hai wahan pe, but the most sensible thing is either you have to change your portfolio positioning for a more defensive sort of a bet, where you will say, okay, theek hai. Plus you can be agile, na? So market upar jayega and the market gives you indication, right? You will see very few V-shaped recoveries, right? Usually you have time. So if you are willing to invest that sort of effort, if you are willing to sort of, have a view on multiple sectors, which I'll be covering during the rest of the portfolio in terms of actually kya karna chahiye in terms of a series of steps. Now, obviously it will not be very comprehensive, but then we will cover the most important parts. That means your portfolio is still in line with, let's say, the new texture of the market, because the texture of the market is going to change. PSUs आपके जितने जो भागे हैं ना, right? Will they run to the same extent in the new run? I don't know. Will consumption make a comeback? IT services जो अभी all time highs पे था before the result, now that has fallen 4%, 5%. So the market is always telling you something. So that is our job as a full-time investor. So I guess that's a very complicated answer, Ankit, but then simple answers देना मुश्किल है as a practitioner. I can give a
नहीं,
simple I can give a simple answer if I am making YouTube videos only and trying to, build an audience. But if I'm managing money for other people, I have my own net worth at stake. I have investors ka, lot of their money at stake. Na? So if you have to give a responsible answer, then answer. I say this, it can't be a simple.
no, it was very helpful, Kedar bhai. And so you covered this question from the point of view of individual investors who are managing their own money. Okay.
Yeah, yeah.
So, but since many of these investors also one day want to manage their own money, manage other people's money, and you and I have been doing that for some time now. So my next question is related to that, as to what I have seen from my limited experience of advising clients over the last 7, 8 years, is that in rising market, the expectation of the client is always they'll compare you with the best in the industry, as in बाकी लोगों का कितना रिटर्न आ रहा है उसके सामने आपका कितना रिटर्न आ रहा है.
Yeah.
And in the falling market they'll always look at absolute return. भाई नेगेटिव क्यों आया,
Yeah.
पॉजिटिव आना चाहिए. And I've seen that multiple times in the last 7, 8 years of advising clients. So what is your view on this and how do you tackle this?
So I'll straight away tell you, Ankit, कि अभी क्या करना है, right? So what you are doing is the true reflection of what your view is, correct?
Right.
So we sort of did more selling in 2024 compared to buying, right? So we added hardly what 3, 4 new stocks to the portfolio. I mean, by nature, na, we don't add too many stocks in a particular year. Hamara churn is usually not very, very high. So we took a decision saying, see, let me not be guilty of trying to preempt what will happen in the market. Fine. And eventually, the market ka texture, when once it changes, right? If your sensing mechanism is decent, na, eventually you will have enough chances to navigate into the right pockets. It's just that you will not know that in the future. So we took a decision saying, if I have constructed a bottom-up portfolio, we're going to go back to every single business and ask ourselves, do we have clarity and conviction on what the numbers are going to be for the next 2 to 3 quarters? I think that is sacrosanct for an institutional investor, because all technicals, all market behavior, everything is finally a slave of the numbers coming in. So if you believe the valuation is reasonable in the context of what you expect in the next 1 year, we don't see any reason to go and prune a position just because the market has beaten it down 15%, 20%, because eventually we know numbers will fall into place and stock prices have to react, right? So we took a decision saying we are not going to drastically change the portfolio construct because we don't know what the next texture of the market is going to be. So instead, we decided we will probably increase the cash allocation in the portfolio. So that's the approach that we have chosen to sort of mitigate some of this downside. More importantly, to have enough dry powder so that if an opportunity comes, we will probably be able to bet in more number of stocks with higher conviction, right? So that's the approach that we have chosen. An alternative approach is to say, okay, we have made a decent amount of money in the past 1 year. Okay, we will continue to be fully invested. We will not take cash calls because I don't really have that skill, right? Then you rotate into defensive, sectors in the market, right? So that is the second thing which institutional investors can do. So those calls in the current market, if you see now, it has actually worked out. So IT and pharma have held. I think googly I have from consumer, right? So-called defensive guys are not really behaving like defensives. So these are, those 2, 3 strategies which institutional investors can use. And then there is one more factor you need to consider कि आपका natural tendency or inclination क्या है. Some people are comfortable sitting on cash. Some people have a tough time being agile, right? So if you're somebody you can be agile, then it is fine. You should bet more often, right? So if your strike rate is good and if you have the ability to be agile, you should actually bet more often. So if you are generally working with, let's say, 20 stocks, in a correction like this one where you are saying, okay, I think the strike rate is going to be lower, increase the number of bets, see what is working, prune allocation to what is not working, so that next wave, whenever it comes, you'll be able to catch. So I guess outside of these 2, 3 things, unless you're running a long short fund, I don't think we have too many options in terms of navigating a correction as an institution.
Got it. Got it. That was very helpful. Kedar bhai, I think we can now go back to the presentation and then
Okay.
we'll probably again come to the Q&A after some time. Yeah.
Okay, sure. Yeah, so now we will get into the context of, where are we right now? Okay? All this history is fine. Where are we right now? So we just put together a few numbers, in terms of the long-term return comparison. So you always have this question, right? This hogs the limelight in the public media, Nifty 50, mid cap, PSE small cap, current with respect to, let's say, the peaks of the previous cycle. Okay. The current indices level with respect to, let's say, the bottoms of the previous cycle, what exactly are we looking at? Now, the absolute numbers obviously are not the most important point here. What we are trying to see is the trend. So this is the Nifty 50 cut trend, right? We're just comparing mid cap cut trend on every single, time frame. 2021, 2018 peak, 2015 peak. We're going as far as the 2011 peak and the 2008 peak. Even if I'm measuring things from the peak, the trend is very, very clear. Mid cap, small cap have done far better compared to the Nifty. I think it's very, very clear, right? Next thing, you do the same analysis from with respect to, let's say, the bottoms, right? So the below table compares the current level with respect to the bottom of each of the segments. So 2021 ka peak, यहाँ पे we are saying 2021, 2022 bottom, 2018 peak, 2019 bottom. Even from here, if you see, compare the Nifty's return to the mid cap return and the small cap return. So everything, I guess the chart, I mean, the trend is very, very secular and it is very, very clear, right? It's very, very clear that. So over here, the question is, what's happening, right? So if we just compare the numbers of everything, I think the trend is very, very clear that says on every single time scale, on every single measurement, even from the peak and from the bottom, you are clearly seeing the mid and the small still giving you an outperformance with respect to the Nifty. We believe some of this is natural and organic, and some of it is probably a cause for concern, depending on which way you look at it. To get more clarity, let's just look at the return from the Nifty, I mean, from the 2020 COVID bottom. even over there, I guess the entire thing is like very, very clear, right? So what we believe is right now, the way things stand, small and mid, which is basically, most of the active investing, right? Because bulk of the Nifty 50 is either owned directly by investors in their personal portfolios, mutual funds. A lot of guys are going over there. This entire mid and small cap investing, I believe it's probably dominated more by the PMS space, the AIF space, right? The advisory and the RA space, right? So currently we are at a point in the cycle where the market has been very, very favorable to you for active investors and for building differentiated portfolios. That's the clear statement that basically one can make, which means the big interpretation that we want to draw from this is it's been a good run. It's been a good run for this, but it's time to be slightly careful and to sort of think through all the situations. Future, obviously, we do not know, right? But I think the secular outperformance that we've been taking for granted of the, let's say, the active investing space, there is a possibility it may get challenged to some extent going forward. That's our big takeaway from this, right? So having provided this context, I'll move on to the next slide. So this is our assessment of, where we are, right? So once again, we just want to separate the facts from our assessment. So covering the facts first. So clearly the market consensus is in favor of a sideways and a downtrending market. Everyone who knows even a basic of technical, he has seen the head and shoulder pattern. Now the only question seems to be, is it a small HNDS or is it a larger HNDS that is basically at play? That's the only, subjective distinction that you can make, right? Most market cap based indices are down 10%, 12% from the peak. Primarily the three that we have been talking about. I guess the Nifty next 50 has actually fallen a lot compared to all of this. They are probably down maybe 16%, 17% right now, right? Third fact is defensive sectors have been holding forth so far. So IT services, pharma, which typically tend to do well when there's a lot of India related selling, right? So India related selling tends to, depress the rupee. So the rupee is obviously depreciating right now. So there's a whole bunch of people who will see safety in IT services and pharma. So that's one of the reasons why these sectors are probably holding up well right now. What's happening to the leaders of the previous run? So they have seen a clear-cut sell-off. So PSE, defense, infra, capital goods, though numbers are okay, numbers are expected to, get better over Q3 and Q4 as the government spending starts to come back. But the fact is the previous runs, the leaders of the previous run have seen a clear sell-off. So just going back to the point that I earlier covered, so BSE small cap is still outperforming on a 6-month time frame, right? Though the recent fall has been very, very sharp. So this entire false bravado phase of saying, okay, my portfolio is better, I will not be bothered by the index level, my stocks are resilient, relative strength and all of that, blah, blah. All of that has been tested in this week's fall, specifically on Monday, where I think it was very, very, it was carnage on that particular day for small and mid cap portfolios, right? More importantly, the limited number of earnings results that we have sort of seen coming through in Q3 so far, any numbers miss compared to the expectations is leading to a 4%, 5% sell-off in the large caps. I mean, look at HCL Technologies, look at Infosys, right? Look at the reaction to an Axis Bank. So clearly, the market is saying if the numbers are even slightly below expectations, you will probably see sell-offs. I mean, you have seen sell-offs. It is likely to continue through the whole of Q3. So these are the facts. These are the things which you can go and verify for yourself, right? Now coming to our assessment of where we are right now and what is the texture of the current market, right? We believe Monday sell-off was probably the first indication of the phase 3 at play in that market correction framework, right? So phase 3, once again, to repeat, sort of, refresh, you will see periods of stability. Then you will see phase 3 like sell-offs. And sometimes you can see multiple sequences of this, maybe 2 sequences, 3 sequences, 4 sequences, nobody knows, right? Now, in our assessment, who are the investors who are actually worse off today compared to the average investor? Who are those, right? So these are the investors who are guilty of chasing the leaders of the previous run. Some PSE stock has basically fallen, let's say 20% from the peak. You go on and put in more money, assuming that's the bottom of the cycle. You are down maybe another 10% from there. Okay? So anybody who's been who's been guilty of, let's say, replicating market behavior, of rushing to buy every dip, which is what a bull market trains you to do, I think those investors are probably oversold today. Now, investors who are guilty of loading upon concept stocks, right? Certain themes, which where people are saying EV aayega, entire market is going to dip, right? So there's a lot of themes on the solar side, right? So what happens in that particular case is then you have just loaded up on a concept stock, right? Where the unit economics is still sort of evolving. It is still not very, very steady. Then even a small earnings miss, even a slight at elevated valuations, you will probably, lose a lot of money from the peak. And more importantly, you haven't calibrated, you are still holding on through the market pivot where your buy price was like very, very high, right? Now, so what does that mean? See, you had a period where small cap index looked very, very resilient, right? Now, small cap index has taken a beating in this particular week. So on this, let me see if I can just put up a chart on the screen. Okay? I think that's very, very important. So what I'll do is I'll just maybe open that index and then put that up on the screen. So here we'll try and bring in the technical angle as well. So I'm just changing the screen share to reflect my trading view screen. Is this visible?
Yes, Kedar B, it's visible.
Okay, sure. So toggling to this, just look at the current pattern of the BSC small cap index, right? So it's given 3 touch points at the high. So that is where you draw the first leg of the parallel channel. And then you see the bottom leg of the parallel channel, which has held up so far till recently, right? Now, it was a big break on the 13th of Jan, followed by a little bit of rise. So I guess the entire thing for a small cap now, it hinges on what the index does from here. So obviously, यहाँ पे you have 2 possibilities. First possibility is where the index continues to trade in this particular channel, right? Which means there is some semblance of stability that is still there in the market, which will give you a little bit of time. But if it quickly comes below the channel, right? If it quickly comes below the channel, there is always the risk of a sudden downside once more. So that's the risk that we are, kind of pretty wary about right now within the small cap index. Now, the basics of technical analysis tell you that you should just be a trend follower. You don't want to sit here and actually speculate saying what is going to happen in the future. You are supposed to have your strategy well defined and just take decisions based on what the chart says, right? So coming back to the presentation. So I hope the presentation is now visible back on the screen, okay? Okay, can anybody just confirm to me if the presentation is back visible on the screen?
Yes,
Okay,
yes.
okay. Thank you for that confirmation.
Yes,
Yeah,
yes.
so I'll just pick up from where we left. So we've just gone and quickly looked at the small cap chart. So which means just look at the overall trend, try and draw an inference. So small cap was holding up all these days, right? Now the small caps has taken a little bit of a beating. If it comes out of that channel and turns weak, just ask yourself which are the next 2 segments of the market jahan pe the entire negativity can spread. We believe the IPO market is still looking very, very vibrant. People are still making a decent amount of gains on the listing day. So logically speaking, that can be the next segment that will get affected if the small cap goes into a downturn, right? Finally, you will have the unlisted segment that will probably see a little bit of a trickle down effect. If that happens, now that will basically complete this correction, right? To what extent, what time frame, the market will tell us. But I think the small cap staying within that channel is a very, very important indicator of what we are assessing right now. Because if that goes, our sense is you will see another quick sell off coming through. Then it kind of takes the correction to closer to its logical position, right? So I guess this is where we are right now. So obviously we are tending more towards a cautious phase. We're not sure if the market will fall further, but we are saying if it falls, we will not be very surprised. You need to be prepared. You need to be prepared. You need to have a plan for what you want to do, how we want to navigate this entire direction, which brings us to the final phase of the presentation. So just thinking out aloud, and we just have a specific slide on this because we just think these are the various factors that we are tracking right now as asset managers, right? So I think this is something it would be good if every investor has a view on this, right? So this is what our framework tells us. So we're just putting this out there. We still believe that paying a high valuation for decent growth, it is still a suboptimal approach. So going and seeking refuge in a large cap where numbers may not come in and the valuation is a little bit too high, I don't think you will be immune to the pessimistic market mood right now, right? At the same time, even after this so-called healthy correction from the peak of about 10%, 11%, the market on our assessment is still nowhere close to the value zone for investors, where you can start pursuing a pure classical value approach where you say the price is so attractive that I will have a regret if I do not buy right now. It may take 1 year, it may take 5 years for the entire thesis to play out, but that is okay. That is something that I can live with as a pure play value investor. So we are not yet at a phase where I think the classical value approach can be relied on very, very reliably, right? So in our assessment, the market is going to take a little bit of time to actually reveal its preferences. So the nature of the market, the preferences, the next segments that will do well, it will probably take a few weeks to a month to actually play out. We don't think this is the time to actually go and chase breakouts. This is a time to just sit back, keep building your framework, observe things, keep doing inferential reasoning, and let things play out rather than pulling the trigger too quickly. So, whatever you buy from here, you need to be sure that you are buying the right pockets. Just doing buying, saying market is down 10%, we don't think that is really going to be the right approach unless you are doing SIPs for the long term. You have a 10-year, 15-year horizon, right? Now, coming to the macro clouds, we believe there's a lot of macro clouds on the horizon. A rising dollar index, I mean, a depreciating rupee, bond yields rising together. There's a regime change that's coming in the US. So, what announcements will come through? I mean, these are all the things that are actually keeping the market a little bit jittery right now. It's not that we have any great insights to share on how each of these factors can play out, but these are the factors which a lot of institutional investors are actually sitting and tracking right now. Right now, this week was a little bit unique because it's the first instance after a long, long time where we have seen all three fall together. Right, the USD INR pair is going into a secular sort of a depreciation. Bond yields actually rose through this particular week. The equity market fell in the broader market. Monday, you had 4%, 5% fall, right? Where it was the fourth consecutive month of FPI at first. The longest stretch of selling was obviously 9 months in 2022. Now, once the 1 year return of SIPs, right, starts to dip below the FD rate. So if you were to pull out, let's say, the return of the Nifty 50 right now, it'll 1 year return is probably in line with the FD rate. Once that starts to print a lower number, 2%, 3% negative, whatever it is, then we need to see if the domestic investor inflows will moderate, will the SIP sort of, run, take a breather right now. So these are all the questions that we are basically sitting and, asking ourselves. So prima facie, it doesn't look like a clear-cut buying opportunity yet. That is our assessment. I mean, prices are okay in certain counters. You can do case to case buying, but it does not look like a secular, clear cut buying opportunity. So that's our overall view, and these are the factors that we will keep tracking throughout going forward. Right. So I'll be just coming into the final two slides, Ankit. So do we want to take a checkpoint here and maybe quickly take a couple of questions?
No, I think, Kedar bhai, you can complete the PPT.
Okay, sure.
Then we can have an extended Q&A session. That would be better.
Okay, sure, Angel. So I'll just proceed and maybe just cover the remaining slides. So coming to the final part of what should investors be doing right now. Once again, simple answers are tough to give, right? If anybody knew what the perfect strategy is to pursue right now, I mean, there's no problems in life with investing. So first thing, if you're already in a hole, okay, please stop digging right away. Needless activity in the portfolio without conviction, without doing research is a strict no-no once the market texture changes, right? All the bad habits that the bull run has taught us, right? So if you're somebody who's been just looking at a technical patterns, okay, saying cup and handle formula, this looks like a potentially an inverted head and shoulders. Bull market, you can shoot first and think later because 70% of the time the pattern works in your favor. But once the texture of the market changes, you need to have conviction on multiple fronts. You need to be sure saying the earnings will come through in a good way. You need to ensure that the valuation is still in your favor. And then you can see the final indication in the technical pattern. Or if your primary, let's say, approach is technical, right? So take the technical pattern first, then try and do some fundamental work. Look for confirmation from multiple, sources and triangulate before you actually go in and take any decision in the portfolio when it comes to buying, right? Please don't operate with a FOMO mindset, right? It is absolutely fine. Long term equity market where you will do well, all that is absolutely fine. But managing the short term also is equally important, because you have to look at the long term as a series of medium terms, right? So if you are doing well on the medium term, the long term return will more or less fall into place, which is the philosophy that we follow at Congruence Advisors. So though we have done long-term investing, there are certain stocks which I have been personally holding from 2011. So that's a 15-year holding period. And this is coming from somebody like me, जो एक stock 15 साल तक पकड़ के बैठ सकता है. Please focus on staying the course over the medium term. The long term will basically take care of itself, which means you need to manage the correction well. You need to ensure that you will survive in the long term. Please don't go any lower down the quality curve. This is not the time to look at marginal businesses which could maybe give you 1 or 2 quarters of decent return. You need to ask yourself, 1 year, 2 years, will the business do well? Is the valuation in my favor? Right now, coming to the specific set of steps which we believe are very, very important. Now, over here, we will be going into behavioral aspects as well, right? So, first thing, our request is, please have clarity on the contours of your specific risk management strategy. Because if this is indeed a phase 3 market, what will probably happen? When I say phase 3, I'm not talking of stage 3 from a technical point of view. We are talking of phase 3 that we covered in the framework earlier, right? Are you doing risk management using cash allocation? In which case, you need to treat cash as a position in your portfolio. Okay? Assume that the return is going to be 6% for the next 1 year, right? And ask yourself, उस stock में आपको कितना पैसा डालना है? Do you want to put 10%, 20%, 30%? Please take input from your personal finance, situation as well after understanding the entire thing, right? Or do you choose to contain volatility through defensive exposures and tactical stock rotation? In which case, you are basically signing up for higher activity, but then you need very, very advanced skills to be able to do this. Okay? This is not for, amateur investors. This is not for people who don't like activity, because tactical stock rotation करने के लिए ना, you need to do so much of work that it is very, very tough to do it without any set of conviction, right? You need to be able to size up the probabilities like really, really well, right? So you need to have clarity. That's the first step on the contours of your risk management strategy, which means this period, however long it lasts, kitna bhi correction आएगा, what is my primary approach to be able to mitigate risk? उस पे clarity होना बहुत जरूरी है, because if this clarity is not there, none of the other things that we are telling you, you will be able to sort of, do it coherent, right? So coming to the second point, whenever you look at the market, whenever you look at the prices, it's not just a question of, watching what is happening, right? You need to try and infer what the market reaction to the Q3 results actually is. And trust me, this is a very, very deep exercise. Now, take a very simple sort of an example, right? Go to the IT services index. It was so strong, right, in the run up to the Q3 earnings season, right? Infosys was holding up at 1950, 1960. So, if you were somebody who were a pure technicals guy, na, there is every possibility that you will take a look at the Infosys chart and you will say, I see so much of relative strength here. Institutional investors are very, very bullish. Most probably result अच्छा आएगा. But what has happened? I think the result was okay. It wasn't particularly bad, but the stock corrects 5%, 6% in a single day. The ADR falls 6%. The stock corrects 6%. So what does that mean? You are taking a concept and basically applying, right? So bull market may, if you have a stock that is hovering near the all-time high, 80% of the time it works. So ask yourself at a fundamental level, right? If the index was strong, TCS के number आने पे TCS went up 5%, 6%, so the industry got very, very bullish, but it has basically taken a turn for the worse. HCL Technologies came up with decent numbers, but the stock fell 10% in one single day. Why? Why is this happening? What are the possibilities? Is it that the market is saying the revenue numbers are lower than expected? Are they saying margin compression aega? Is the market saying business is fine, but the valuation is not deserved? What exactly is making the market jittery that explains the sell-offs that are happening? Now, to take a positive example, things were looking so gloomy for life insurance, right, going into Q2. HDFC Life posts a result. Stock is up 10%. I mean, it's a mega cap, more than 1 lakh crores of market cap, right? It is up 10% post Q3 results, and Q3 results were decent. What is so great about the Q3 results? At least we haven't been able to see anything so far. So, ये market reaction से आपको क्या लग रहा है, right? What is the market trying to tell you? Is insurance sector going to be a defensive going forward? Look at its historical valuation with respect to the current valuation. What is the right way of valuing, let's say, a life insurer? Is it price to book? Is it price to earnings? Or is it, let's say, embedded value to the market cap? You need to start asking yourself all these questions and start improving the depth of thinking before you take any particular decision in the market, right? Third important point, when you track stocks, please don't track your stocks alone. You may be running differentiated portfolios. You may be primarily fishing outside of the Nifty 100, but there is significant benefit in tracking the largest stock in that particular sector because that tells you the overall context of the industry. Now, keep investing aside, right? The broader sector trends are usually called out by the market leaders, right? So ideally, if you're an infrastructure investor, if you're bullish on the EPC space, you have to track L&T, you have to listen to their conference calls because L&T has been pretty vocal about one thing. L&T has been saying there's a clear, shortage of skilled manpower in the country in this particular segment, right? Now, if the market leader is struggling, end of the day, you think a smaller player is going to be immune, right? More importantly, a market leader has better tracking mechanisms. A large company will have maybe a 10 member 20 member market research team. They will have every week they will have a presentation that is made and shared to the senior management, whereas a smaller company is doing things well, they are growing, but then they don't have this sort of analytical depth. So what it means is when a sector leader starts going into a downturn, or if a sectoral leader starts saying things are going to be tough, let's say going forward, what it means is as an investor you need to start basically ask yourself ki, how long will it take for this entire thing to translate into the next remainder, I would say, companies as well. And once a sector starts a low growth phase, it usually lasts for a few quarters. As they say in investing, there's no one single bad quarter. One bad quarter is usually followed by 4 quarters, 5 quarters. And technicals, as they say, the first exit is usually the best exit. So please don't be, I would say, limited in your scope of analysis. Don't don't say I will track only my set of companies because this basically tells you key how do you place what is happening in your particular stock in your particular business in context of what is happening to number one, the sectoral leader, and what is it doing in context of the overall market as well. So a lot of these things now it just comes down to doing more work on a behavioral basis, working towards more analytical rigor, working towards more probabilistic thinking, and being more data backed when it comes to taking decisions on the portfolio, right? So last 3 points that we want to cover. I mean, if time were not a consideration, maybe there would have been, I would say, 10 more points over here. But over here, we are sticking to, the behavioral habits which we think investors need to sort of increase, rather than talking about, certain tools or certain frameworks that you can use. Please start tracking as many sectors as you can, right? You need to develop a broad coverage universe. I mean, even if you're a serious retail investor, if you want to become a good investor, you need to keep asking yourself, what is the size of my coverage universe? Ideally, it should keep increasing every year. You should be adding more sectors, you should be adding more stocks, right? So please don't hide behind this, can of circle of competence. Circle of competence, if a 70-year-old fund manager tells me, I can understand where he's coming from. But people like us who are not yet at that level of experience, we should be tracking as many sectors as possible because then you will probably miss the forest for the trees. Second most important point, concentrated portfolio, we believe it should be the outcome of investing, right? Concentrated portfolio is something that you end up with after 3 4 bets have gone on to do very very well. But please don't give yourself a target saying I will start with a portfolio construct where concentration is the most important thing, because you do not know, especially if you are looking at, let's say, undiscovered businesses. if you are not talking of very, very large companies, what will probably end up happening is you will not be able to, have conviction when you take the decision, right? So you need to work towards a framework where you're actually analyzing which sectors, when which sectors are sitting in stage one, right? So stage one precedes stage two, correct? So okay, ask yourself every single sector, abhi IT services kahan pe hai? Where exactly is FMCG? Where exactly is pharma? And this should be an iterative exercise you keep doing ideally every 15 days or every month, or at least one quarter, you need to keep doing this. Spend 30 minutes every day looking at daily earnings that is reported on platforms like Screener. So Screener gives you a very good functionality, quarterly results on your right hand side. Just click on that every day, 30 minutes, just go through the numbers. You will see earnings momentum kahan pe hai, YOY growth kahan pe aa raha hai. Then you look at the valuation, that itself will sort of trigger your entire thought process. So read investor calls wherever you think the earnings are either too good or too bad, right? Where you see a lot of reaction coming. Try to build models. When I say models, I'm not talking of a complicated DCF model. Ask yourself, next 2 quarters, what will be the top line, what will be the PAT, what are the basic variables that you need to track. You yourself will see there's a lot of analytical rigor that is going to come into your decision making framework. Once you start doing this, it becomes very, very clear. You'll probably understand why the previous quarter's result was pretty good, but the market is still beating on that particular stock, right? More importantly, in a bear run, please become very calculated in your decision making and actions, right? Vibrant market, you can bet purely basis the chart or after estimating the earnings. In a pessimistic market, you have to get at least two perspectives right. Ideally, you should have three, four. Get two perspectives right. Do the fundamental analysis because you have time. The good thing in a bear market is this: you are under no pressure to take decisions. You are under no pressure to go and figure out which is the next multi-bagger stock, because you will have weeks or months at your disposal. So please do that work and then space decisions out over time rather than pulling the trigger in one single shot. So what am I saying? If you get the feeling that the market is going into a bear run, that doesn't mean you should exit the entire portfolio in one single shot, right? Don't say I will move from 70% equity to 30% equity in one single shot, because chances are you will time the decision absolutely wrong. So space decisions out, make allowance for analysis and timing to be wrong, because your strike rate is going to fall in a bad market. So the process of evaluation, rejection, selection, action, you will have more time. Bull market, you have 15 days to research and maybe 2 days to act. Otherwise, the stock is up 15%. Bear market may that 15 days can become 3 months, 4 months, 6 months as well, right? In certain cases. So please don't rush the process. Don't drive anything based on the outcome. Just because you have researched the stock, researched the sector, it doesn't mean you need to go and do something about it. Come up with some sort of a relative, attractiveness assessment framework on your own. Make a start somewhere. Don't aim for perfection. Just fine tune it over a period of time. Final point which we say is block out noise. Please focus on getting the basics right. Right? There's a lot of noise. I mean, lot of time now. If you sit and watch any of these media channels, what are they doing? They're just sitting and giving you data points saying today this stock is this much down. See, it's a lot like looking at the traffic here. If I give, let's say, a bus and an auto wala a 10 kilometer stretch, I can sit and give real-time commentary saying who is ahead, who is behind, what is going on. Trust me, end of the day, average time जितना लगेगा आपको उतना ही लगेगा. So the markets are something similar. Please block out needless noise. More importantly, please prune your list of who you take, Gyan. Right? The way you are ruthless at rejecting stocks, the way you are ruthless at cutting portfolios, now you have to prune out, you know, certain people from your ज्ञान giving list. Please be clear कि किसको follow करना है. Follow people who are giving you a lot of, I would say, the justification for why he's thinking. You want to work with people who are transparent in this, right? You don't want somebody who's going to change his thinking based on what the outcome is. So these would basically be the behavioral factors which we believe are very, very important. So please spend a little bit of time, thinking about all of these factors. It will take time for you to put these frameworks into place, but trust me, there's no easy way of, excelling in the entire market. The market will challenge you even if you have 50 years of experience of investing. Even the best investors are proven wrong by the market very once in a while. So overall, we would say these are the suggestions. So Ankit, happy to take questions.
Thank you so much, Kedar bhai. That was very, very, very detailed, and you covered many aspects. So what I really liked about the presentation was that it started with data, it started with a lot of things of the history, and then you tied it up with the behavioral aspects also towards the end, which makes it a complete presentation, and especially for people who have not seen the past cycle. So talking
Mhm.
about the past cycle, there are a couple of questions. So one question
Sure.
is where, uh, if you look at the current Q3 results, which have been announced till now, so
Mhm.
we see that there is a huge volatility there as well. So
Yes.
have you seen something like this in the past where there has been too much volatility in terms of different companies posting different kinds of results? Some doing really good, some doing very bad. Any point in the history you remember and try to connect it with?
I think there have been multiple instances, even in the recent past. I think specifically what comes to my mind is I think October to December of 2023, right? You had a lot of volatility in the market, right? Because at that point of time, I think the market was beating down stocks for a couple of reasons. Number one, high valuation in certain pockets, right? The market darlings of the previous run. Somebody would return somebody would give you a lower than expected sort of a result, and then stock prices would be down. Certain small caps, let's say infrastructure play, capital goods play, there was a fear in the market saying, okay, you have this big election that is coming through in the next year in June or in May of 2024, right? And then you had those two, three state elections that were there towards the end of 2023, right? Which the BJP won massively. That is when the market said, "Ki boss, policy continuity aayega," and then you stop seeing gyrations, right? So the market can go into these spaces. Now today you have policy continuity. I think the key thing which the market is saying is the healthy growth rate that you saw from 2022 to 2024, GDP wise, sector wise, IIP wise, all these things. Market is saying, is that a one time COVID adjustment because you fell a lot and then you recovered a lot? Now your baseline growth itself is, starting to taper. I think the market is definitely worried about those things. Definitely. So that's a very strong possibility. So multiple instances of something like this happening. So you will see result on the face of it looks decent, but there are so many expectations that are built in that the stock price basically starts falling. So happens a lot. It's just that the reason keeps changing, and it's very, very important that we sort of, understand the context behind why the market could be doing. Yeah.
Yeah. So moving on to the next question, Kedar bhai. So one of the participants is saying that there are catalysts for fall, but there would be some catalyst for turnaround as well. Uh, what would be that in your view?
Yeah. So catalysts for a turnaround are usually just two things. Actually, it is just one thing, right? It is just expectation of better numbers going forward. That's it. Our question here. Just go back to 2021 EPC players available at what, 15p, right? 15p pe you could have picked an EPC player which just kept growing at 30% since, right? So turnaround usually is on the basis of, durable turnarounds. Let me put it that way, because that is what we're interested in, right? You don't want to buy a stock which goes up 30% and then that's about it, right? You want to buy somebody who will maybe go up 4x, 5x, 10x, whatever it is, right? So durable turnaround ke liye you need to see the business numbers come into place, right? Business numbers एक बार आ जाएगा. What you will see is you will start seeing certain institutional investors who are probably voting with their love. That is where you will see the first, breakout from the low. आपका पूरा टेक्निकल पैटर्न चेंज हो जाएगा एंड यू स्टार्ट सेइंग ओके स्टेज 2 में शायद ये जा सकता है इफ द नंबर कम्स इन. देन द नंबर कम्स इन, देन यू गेट इनटू मिनी वर्चुअस साइकिल. So in my experience, right, technical patterns are formed by investors who are probably deciding based on a variety of factors, right? So you need to get your earnings trajectory directionally, and even I would say numbers wise, if you can get it right, that is where a turnaround materializes. That is the only durable factor. बाकी सब ना ऊपर नीचे होगा. Suddenly you will see that the US Fed will maybe do more rate cuts. Then it's okay. You can always say terminal value improve होगा, but that's not going to make a difference to your life as an investor over the long. Durable के लिए it is just business numbers that have to basically fall into place and keep getting better.
Right. So, Kedar bhai, a follow-up to that, and I'll probably trickle down more to some of the industries, how they are doing, and how do you make sense of that. So, for example, there are two ways of looking at the current situation. One is there are industries which has not performed over the last, say, couple of years, and where the valuation has come down a little bit. But probably the current numbers are not showing growth. So you are taking up, so if you invest in them, the risk is that maybe the growth will come later than what you expect. So maybe I'll expect it to come towards the end of towards the end of FY25, or maybe Q1 FY26 or Q2 FY26. But eventually the growth can surprise us negatively by getting a bit delayed by a couple of quarters or maybe 3-4 quarters. That is one. And the second one is where right now the results are fantastic, the growth is coming, but the valuation is very high. So like I'll give you just example. You are sure, I'm sure you already know the industries I'm going to talk about, but for the benefit of the viewers who are watching live and will probably watch the recording. So like in the first camp, I would put something like financials and chemicals, okay, and maybe QSR and consumption stories also, okay. Second stage may you will probably have things like semiconductor, uh, green energy, and all these EV and the power theme and all those things. So how do you reconcile? Because as an investor, I'm sure even with multiple cycles experience, you will still find it challenging. Of course, you would somehow found a framework for yourself. And I'm sure that if you share that with the viewers, that would be very helpful to us today.
Yeah, absolutely, Ankit. So I mean, which is why the market is always challenging, right? Hindsight might look simple, but see, just to take your example further, lenders may, so I think there is still a little bit of pain expected in Q3 and Q4. So microfinance में कितना होगा किसको पता, right? 5% का NPA जो है, people have said Q2 was the worst, but who knows, man, right? Q3 might be bad, Q4 might be bad. So lenders is clearly a case where number one, growth of assets नहीं हो रहा है, right? All these days you had concern saying CASA growth नहीं है, there is a NIMSAR compression, which I think will basically it's a cyclical thing that will get addressed. Right now the market is saying your asset quality has taken a worse for a whole lot of lenders. Number two, the largest banks are actually struggling for growth, right? So I guess उस case में it's like this. When do you get it, right? Assuming you have made the decision to get it. So, which is why, if this situation were happening when the overall market were in a bull trajectory, okay, you can afford to say I will be slightly ahead of the party. If the overall market sentiment itself is not good, then ideally I would say spread it into tranches. If I want to take, let's say, a 6% exposure to a bank, let's say if my opinion is that HDFC Bank is secularly undervalued right now, okay, and if I believe that the numbers will basically get better, then the only way you can do is you can space out your, I would say, actions and give yourself more allowance to be wrong. आज 1 टका खरीद लो, फिर 2 टका खरीद लो, right? And then you figure out saying ठीक है, at some point of time you will go and complete your allocation, which I think is a more calibrated approach for sectors which are not expected to do very well, but where you think long-term value आपको दिख रहा है. So this ties into the point where I'm saying space your decisions out. Look for confirmation from multiple angles. Fundamentally, I need to see that asset quality will not get worse from here, right? Growth will probably get better in the next 1 year. That's a forward-looking call you can take. But seek confirmation from a little bit of fundamentals and technicals as well. The risk is key. You will probably miss that 10%, right? But it's okay, no? I mean, you have to kind of optimize somewhere. So that's the first example. The second example is where you have growth currently, everything looks fine, right? The concern is purely valuation, right? Now, उसमें से भी I'll have to see, is this the second year or the third year of that particular theme doing good? So power capital goods, once the numbers actually started getting better in 2021, then there were no expectations that were baked in it, which is why you are able to pick up stocks at a pretty decent. I remember Apar when we bought at 20 PV, we were asking ourselves, is this expensive? Today, you look, that entire analysis looks foolish, right? Because people are willing to buy even at 45 PV. But trust me, taking the decision in 2022 was not easy, but it was easier than taking the decision today because I know I'm getting in on the back of no expectations. Today, I guess the market pretty much knows that capital goods will probably do well. Power ka jo turnaround hua hai, it is not going to fizzle out away. But the point is, then आपके expectations क्या है? If you are expecting saying you will make a multi-bagger return from the current level, I think that's not realistic. But if you think you will make 15%, 20% अगर आपको करने का अगले 3 साल में, I think it is fine. So it comes down to that sort of thing. What do you expect this sector to deliver? Are you getting there with the expectation of alpha generation? Do I want this to be my rock star like Sehwag? चल गया तो भाई 300 बना लो 200 बॉल में, ठीक है? Or do I want this guy to be a Dravid who I know कि बस the day India is 30 for 3 ना 200 रन हम लोग पहुंचा देंगे, we will not be out the match. So that is the basic aspects of portfolio construction, right? So उसके basis पे हमको करने का है. Best way of doing it in my assessment is this: just build a model for the next 2 to 3 years, right? Now, even after you build a model, there is no way you can justify the valuation in some of the sectors like EMS right now. I mean, 90 p pe if you go and buy a stock, but the business can grow at 25%, 30%. So what will kill that stock is not a short-term earnings collapse. If the long-term growth trajectory gets affected for whatever reason, that is where you will see a 90 p becoming a 50 p and the market saying कि ऐसा नहीं है. So when you construct a portfolio, you will have stocks in multiple categories. एक एक कैटेगरी को ना, you have to look at it through a different lens rather than saying मैं growth investor हूँ, value investor हूँ, in which case ना you will get confused. So I guess it's a question of becoming more and more nuanced, right? As you get more experience as of being an investor. That's been my view and experience.
No, that was very useful, Kedar bhai, and I think this is a very good way to come to the end of the session. And I didn't realize that we have already crossed 2 hours. I thought that we'll have 1.5 hour to 2 hour session. So thank you so much for taking time out and sharing with us your experience, your insights. So before leaving you, if you want to have any closing thoughts for our viewers who are live now or maybe will watch the recording, that would be very useful. And then we'll call it a day.
Absolutely, Ankit. So first thing I want to tell your viewers is that anybody who's sort of, working with you, they're in good hands, right? Whatever I have seen, because at the end of the day, you need people who will give you multiple perspectives, right? The bane of the current situation in the world is when you speak with clarity and confidence, people will be impressed. That is how sales works, right? But that is going to be the complete antithesis of what makes for a successful investor. See, a successful investor will always be plagued by some amount of self-doubt. So in that sense, I think the audience is in pretty good hands, number one. Number two, I guess simplicity मुश्किल है in investing. That is something we need to really reconcile to, right? So there is no replacement for experience and for doing work. I can probably find a lot of guys who are very high IQ, but if that openness is not there, if that hunger for learning is not there, right, it is very tough to stay the course in investing, because then you start looking at everything as an outcome based thing. पैसा बन गया तो सब ठीक है, पैसा नहीं बना तो you will say भाई कुछ तो ठीक नहीं है. So having an orientation on the outcome is pretty good. More importantly, investing mein one of the things is what you do at the market pivots impacts your return drastically, right? I can drop a 15-year analysis and say even if you bought the Nasdaq at the peak of, let's say, 1999, you are still in the money. But what nobody tells you is, instead of buying at the peak, if you had bought it 20% lower, okay, your outcome would have been better than what it was. Now, obviously, you can't catch the peak, you can't catch the bottom, but what we can do is now we can only increase our probability of getting things right, right? And that is a long term iterative endeavor, right? Look at everything as a process. There are no events in investing. Everything is a process. Rate cut is a process. GDP growth is a process, because that process depends on so many inputs, right? So I think becoming more structured in your thinking, getting more analytical rigor, improving your, I would say, the number of tools that you're using. So relatively, I would say I'm a newcomer to technical analysis, but now we have about 3-4 years under our belt, and I can straight away tell you it gives me more nuanced thinking in terms of taking portfolio actions, right? So as long as we keep doing that, things will basically fall into place. So बड़ी गलती मत कीजिए, छोटी गलतियां हर कोई करता है. It's a part of the learning thing. We need to pay the tuition fee to the market. So long as we do things with that perspective, na, things will generally fall into place. So long as you work with a good way. उसके लिए अंकित भाई आपको. So I guess your viewers are like pretty good, and it's been a pleasure coming on your platform. I don't think there are too many platforms where people are actually able to take this sort of a time out. I mean, Saturday afternoon you can be doing a whole bunch of things, right? For people like us in Bangalore, there are so many options to go out and do time pass or have a good time. But then people are logging in on a Saturday afternoon, taking time away from their family, from their personal lives, and they are showing the zest to become a good learner. I think it's a very good thing that a lot of platforms are doing. So I wish you guys all the best. I wish all of you all the very best. So I just went through a couple of comments. So Ankit, what I'll do is na PPT में आपको share कर देता हूँ, right? So you can send it across to your people. And last slide on my PPT anyway, I have the connect, right? So you can reach us on any of these platforms. So we'll be very happy to connect with you. So that's about it, Ankit. It's been a very good first session along with you guys.
Great, great. Thank you so much, Kedar bhai, and specifically the way you ended up in the right way, as in the last piece of advice where I think not taking any risk in the market is probably uh, is the biggest risk as an investor you can take, right? So छोटी
Absolutely.
गलतियां, जैसे आपने बोला कि छोटी गलतियां सब कोई करते हैं, so we should be able to take calculated risk. Of course, we will get wrong, we will get right. जब तक परमानेंट डैमेज नहीं हो रहा है एंड वी स्टे द कोर्स, आई थिंक वी शुड बी टेकिंग सम रिस्क, सम कैलकुलेटेड रिस्क. नहीं तो फिर मार्केट में क्यों है, फिर अपने को तो एफडी में पैसे लगा देने चाहिए सारे, राइट?
Yeah, absolutely. So as they say, na, the only way you can avoid taking a large loss is to take a small loss, right?
Wonderful.
Right? In a bad market, it's the only way you can protect yourself. So ठीक है. I mean, the market will throw emotional reactions at you because nobody wants to lose money, right? But then losing money, why? Everybody loses money. The only question is how much do you make when you're right and how much do you lose when you're wrong. So long as that proportion is good, I think things will fall into place. So we should all try and improve our probabilities. So keep learning, keep experimenting, keep taking risks, but know when to cut your risks and have an overall framework ready. That's all I would probably suggest to you.
Thank you so much, Kedar bhai, and thank you so much, everyone, for patiently hearing and asking some really good questions. And as communicated by Kedar bhai, we'll share the presentation also with everyone. And by the end of the day, we will also have the recording of this on our platform. And after a lag, we'll also put it on our YouTube channel as well. So thank you so much, everyone. Have a nice weekend. Bye.
Thank you, everyone. Thank you, Ankit, for this opportunity.